How to gain an edge trading earnings. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. Oh, first and foremost, some formalities to get out of the way. We're not financial advisors nor a broker-dealer. I always throw that up there because I spent 15 years in the brokerage world, which I'll talk a little bit about that later because obviously some things have changed drastically in the brokerage world very recently. So we'll discuss that. Next thing, we have a copyright disclaimer. This is ours. This is not yours. You have to have written consent from the National Football League. No, from TheoTrade. But the real reason we throw this up here, and I always want people to know this, you can contact us after tonight. Okay. You know, we are a group that answers emails, we answer questions, and if you need to get a hold of me after this evening, the easiest way to get a hold of me is support@theotrade.com. We actually use a common inbox, so that effectively means if you need to get a hold of me or anybody there, just go to support@theotrade.com. It makes it a lot easier that way. Our office is located in Scottsdale, Arizona, although listen, a couple of people were chiming in from like Chicago, Illinois. I did my time in the Midwest, people. It's cold. All right, moving along over here. Well, this is why you were here. I mean, listen, you're here tonight. You're spending the time. This is a couple of the major, kind of takeaways. I mean, I literally want you to be able to walk away from this webcast with some of the following knowledge. Number one, discover expected move. Okay, so some of you may or may not be familiar with that terminology, expected move. You're going to hear it a lot tonight. I'll explain it and how to use it around earnings. The second most important thing over here, learn how efficiency in the markets, that's important, can benefit retail traders. Now, all of us are retail traders. I'm no longer a market maker. I'm not a broker dealer. Okay. I'm a retail trader just like you. You know, I use trading application just like you do. Okay. We're actually going to talk about how efficiency really benefits retail traders and use this is an advantageous resource in all aspects. This is what I'm going to talk about tonight. All aspects. It could be investments. It could be retirement accounts and cash accounts, futures trading, everything. Number three, learn what weekly strategy will take extreme minimal risk and produce astonishing returns surrounding what we'll term predictable or manipulated movements. Now, manipulated is a very strong word, but I'll show you precisely why we use some of that terminology. Number four, discover a unique method you can use surrounding, of course, earnings announcements. We're actually going to teach you a little bit of a strategy around earnings. So with that, one thing I want to present to everybody that is joining us this evening, it's kind of our gift to you. It's free, okay? If you stay with me until the end of this webcast, we are going to present everybody an earnings expected move indicator. Listen, we want people to stay tuned. We want you to tune in, turn on, and understand, okay? It's worth it for the expected move indicator, but it's worth it for the knowledge that you're going to gain. And this expected move indicator, this earnings expected move indicator, goes right in line with what we are discussing tonight. I mean, what this indicator does is it provides expectations of stock price movement, surrounding earnings announcements, $197 value. And again, I will give you a specific link at the end of the webcast to that particular indicator. The indicator looks something like this. This is the indicator, right? So this happens to be a screenshot of Netflix. This is an earnings expected move indicator. It uses the options market to determine, stock price movement before an earnings announcement. So it's effectively saying like we're supposed to move up or down X amount come the earnings. Does that kind of thing maybe interest a few of you? All right. Again, these are not rhetorical questions. You feel free to jump in anytime. The earnings expected move indicator. Again, I'll present the precise link right at the end of the webcast. Stay with me tonight. Next, a little bit of housekeeping items. Tonight, listen, this is skill set. You got to pay attention. I'm going to fly through some of the material. We have a tremendous amount to cover. And you got what? An hour and 10 minutes? I hope that's all right with everybody. So when, Okay, I go through this. Listen, whatever it takes to be able to focus on it, shut the door, turn off your Skype, your chat, your WhatsApp, whatever else is distracting you. Get rid of Facebook altogether, right? Phones, I say put them on silent mode. Kick out the kids. If you've got kids, if you got grandkids, all right? The dog can stay. You got to keep the dog or the cat. Okay, listen, you took the time to be here. This stuff is important. Okay, it's important again. Whether you're going to trade earnings or not, you're going to learn stuff tonight that can have, again, effects in everything that you do in the markets. It's important. Focus on being here. Now, a little bit about me. So again, if you're brand new, who here tonight is brand new, has never been to a TheoTrade presentation, has no idea what a Don Kaufman happens to be. So this is kind of for you. I'm going to give you a little bit of background history on myself. Okay, awesome. Somebody came in here brand new. All right, only 3 people came in and said brand new. So everybody else here is your long time, Theo traders, okay? Or you've been around the industry for a while. So I've been around the trading industry for quite some time. I actually grew up around trading, Chicago traders. I started trading in the late 90s, 3 weeks outside of college. In fact, it was just before the fall of long-term capital management, if anybody remembers, in 98. A short term after I started trading, I was actually I was making markets, and they moved me upstairs. And then shortly thereafter, I got an offer, and that offer was to come to work for an unknown firm. That unknown firm turned out to be Thinkorswim. So Thinkorswim, I started there in 2001. And had tenure there all the way till 2015. I built the education division of Thinkorswim, and then I went on to run education for TD Ameritrade. At the time, we had about 7 million clients. So I always tell people, well, the stuff that I am talking about tonight, a lot of that stems from, I watched order flow for 15 years. And a lot of people don't know what that means. Like, okay, so you watched order flow. What does that mean? I watched everything, okay, that you've done. I've watched every retail client pretty much for 15 years, right? I had access to everything, and we studied traders. We studied retail traders to build the education division of both Thinkorswim and TD Ameritrade, right? And when I say study traders, we didn't just open up like, hey, this is Joe Below's account and open it up and try to figure out what they're doing. We actually used, big data. And we went through and say, all right, if you do this particular strategy and this particular client is doing it, what are some of the success rates? And we know all of them. I mean, we studied traders. And, what you learn here comes from watching, literally billions of dollars flowing through in others' mistakes and the knowledge of really what works best for retail traders. And that is a big portion of what we do here at TheoTrade. And I try to reiterate that time and again. It's, again, watching order flow for 15 years is quite insightful. I've also done a couple of TV tours. I still try to do this from time to time. By the way, this is one of the more recent ones. This is TD Ameritrade's new network. They had me in-house there in Chicago back in the month of August. I also have a couple of more of the memorable CNBC experiences. I've done a lot of CNBC over the years, but to be pitted against the shark himself, Mr. Wonderful, kind of a memorable experience. By the way, he was the long in Apple and I was the short. Okay, and I won, at least that particular time frame. All right, so that's a little background knowledge, and let's jump into this. All right, let's jump into it and start here. Price movement defined. All right, so listen, as stocks move, traders and investors alike, they can measure those movements after the fact, right? So we're going to talk about expectations of price movement. When I say expectations, what you should think about is what is coming in the future. But, when most people are looking at price action in the markets, they're usually looking at what's termed historical volatility. Right? What is that? It's the annualized standard deviation of past stock price movement. Listen, historical vol. It tells you the rate at which a product is actually moving based on previous days or previous weeks or even previous years of data. So when people are talking about like, price movement and so forth, they're talking about basically what happened days ago, what happened weeks ago, what happened months ago. Listen, this is Netflix. Now I'll bring up Netflix a couple of times in this presentation. The reason I'm bringing up Netflix is it has earnings this week. And I just wanted to show you, all right, earnings are coming. And the earnings are coming. And what I want to show you is Netflix just prior to earnings and its historical volatility, okay, has subsided, okay, leaving the trader or investor blind as to the imminent risks of the earnings announcements. Like most people don't think of it that way, but hey, listen, okay, looking at things like historical volatility or price action in the chart, do you know that the price action, meaning that the actual movement in markets, typically dies down right before an earnings announcement? Typically, it's not in every single stock, but if you look at Netflix, I mean, this thing's a mover and a shaker. And yeah, the historical volatility has kind of died down a little bit, and you can see things kind of mellowed out right before the earnings announcement. And of course, the earnings announcement, what is it? Okay, I mean, we're talking about tomorrow. Earnings are coming inside of Netflix, and you're blind to what the risks happen to be. That's why we're going to talk about a market of foresight. Looking back is great, provides plenty of insight. If only we could produce foresight in the markets. Enter the options market. Now, at that point in time, I'm going to tell you right now, I said the O word. I said it. What's the O word? The option word. Okay. Listen, I know that not everybody joining us tonight, okay, not everybody joining us tonight trades options. Anybody here brand new that has never traded an option? You know, we said anybody brand new and not really, no TheoTrade, but has anybody here never traded an option before? It's all right, okay, because I'm just kind of curious because I want to gear this for whatever level that you happen to be at. And we have a lot of people on tonight. And it's important to me that, hey, listen, if you're brand new, you never traded an option, okay, then that's fine. And I'm not telling you right now that you need to trade an option. What I'm telling you is that the options market, okay, can tell you a tremendous amount about future moves within a given stock. Again, most people, they view options as this ability to, let's take a shot. I think the market's going up. If you're bullish, take a shot. If you're bearish, take a shot. And you don't have to trade the stock. But people, there's so much more to be derived from an options price. We view options, again, as placing a price tag on risk. But I want you to remember something about options, okay? Options don't expire necessarily right this second. Options, okay, they expire a day from now, a week from now, a month from now. If an option expires a week from now, what is that option telling you about that next week? Okay, it's telling you, okay, what people think of the what? Of the stock. Now think about that for a second, because people, again, they always view options as, I'm going to take me one of them shots. It's not about that. It's putting about price tag on risk for the future. That's what an option market is really about. Now, options, they're your future, okay? They are your future. Why is an option trading for $3? Now, I'm just throwing that out there. And again, it's not a rhetorical question, but if you have an option, it's trading for $3. Why is it trading for $3? Okay? Embedded in options pricing is the implied, okay, or future move of a stock. What that means is it's an implication of what the stock is going to do. So if you look at a stock, all right, and by the way, I could give you an example after example after example tonight, but if you look at a stock, and I like to make all examples instead of a regular stock, I make all examples stock, all right? That's my fictitious symbol. And stock is trading at $100, and you have this option trading for $3, okay? Clearly, the option's trading for $3, and if this is a call option, it means somebody thinks that that stock can get to 103 or above. But you know what? In options, you got to remember, in every option market, there's both a what? There's a buyer, okay, and a seller. And the buyer and the seller, they agree on the price of $3. How do you know they agree on the price? Because the thing wouldn't trade if they didn't agree on the price, right? There's a bid and an offer. So when you look at something at $3, you're like, oh, I know the stock is going up. Really? Do you think the seller of that option knows it's going up? No. The seller of the option's thinking, I know that stock is probably not going up. And they meet at $3. And that's important. And I'm going to explain why here in just a moment, right? So if we know what to look for, okay, in the options marketplace, we can determine how far a stock or index product can move within a given period of time, right? So if you know what to look for, you can say, hey, the options market says that this stock is going to move $5 higher or lower. Higher or lower. Doesn't know which direction. You don't need to know which direction, okay? Question for a lot of people, though, why aren't they using this? By the way, this is not technology, okay? This has been around since the beginning of options. People use options to kind of like handicap what the stock is supposed to do in the next day, in the next week, in the next month. You need to get in the know of what is expected. You got to get in the know of what's expected. Now, that's exactly what I'm going to do. I'm going to try to get you in the know. Now, this is stuff that, listen, you tune in tonight. I want everybody tuned in tonight to be able to take something away. Something that is incredibly, when I say tangible, you can touch it, taste it, you can use this tomorrow. And that's why I call it getting in the know. You may not know where markets are going, but you can measure how far the markets can move within a given period of time. Now, that normal fluctuation is what we term expected move. Listen, you guys are going to hear this term a lot from this point forward. Okay, thus far we've mentioned expected move 3 or 4 times. Now, quick question before we go into this: how many people that are tuning in tonight do know what expected move is? How many people know what expected move is? Because if you are using, if you're using like the Thinkorswim trading application, Thinkorswim belongs to TD Ameritrade, they use that term on there a lot, okay? I worked extensively on the expected move equation. So, a lot of people are coming in here like me. Awesome, okay? Now, what I'm going to do for the people that do not understand expected move, I'm going to get them up to speed. And then the people that do understand expected move, I'm going to get you to a whole nother level. Does that sound good? And by the way, if you get a little lost tonight, grab big chunks of logic. I don't expect everybody, even the most extreme, are not going to grasp every single, aspect of tonight's presentation. Listen, I intentionally put these things together and make you reach for it. Because if you understood everything that goes on tonight, what would be the point of attending? All right? You're going to learn something. Everybody's going to learn something. What to expect with expected moves. Danger, expectations, okay? I feel like I'm on a date. Expected move does not tell us which way the markets are going to move. It doesn't. But it does tell us the approximate movement an equity or index product is likely to encounter within a defined period of time, right? So what we're going to say is this: expected moves explained. So this is why, okay, I'm going to draw a little something on your screen over here. So let's start with this. This is, once again, it's stock. By the way, it could be any stock. It doesn't really matter what stock it is. It's stock, and stock is trading right smack, okay, at 100. Now, for those of you that have never traded an option, I'm going to look at what's called a 100 call, okay, a 100 call. And let's say that 100 call is currently trading for $3. But I'm also going to look at what's called a 100 put. And that 100 put is also trading for $3. Now stop right there. First of all, if you're brand new here, you need to know what a call is. What's a call? Call gives you the right to do what? Right to buy. If you go out and buy a 100 call, the 100 call gives you the right to buy the stock at 100. What'd you pay for it? $3, $3. Now, that, okay, would give you approximately, let's call this we're going to make this a month, okay? 1 month of time. So 1 month from now, you need that stock. If you buy the 100 call, okay, you would need that stock to go where? Up. Buying a 100 call is a bullish trade. You would pay $3 for that. So where do you need the stock to go? Minimum. Where do you need the stock to go minimum to make some money on that? You need to go to 100 plus the $3 you paid for it. It's got to go to 103 minimum. Great. Moving on. Okay. Let's not even worry about the put right now. The put's also trading for $3. Push it aside because people get all freaked out with puts. Are like, a 100 put? I'm buying the right to sell. And then all of a sudden your head just explodes. What I want you to know about options is this. Okay, the $3. How was the $3? How was the $3 determined? See, this is the part that even experienced traders don't get. Even experienced traders kind of get lost in here. How is that $3 determined? It's one of the most important aspects of understanding expected move. The $3 is determined, okay, once again, by what? By a buyer, okay, and a seller. There's a buyer of this option. There's a seller of an option. It's just a market maker. For every single trade, there's a buyer and a seller. And they actually come into what we term supply and demand. Options, yes, options have time frames. It's good for 1 month. But this option, okay, is more about supply and demand than it is about time. Time is a given. You know that 1 month is 1 month. Okay, and every day that passes, that option is going to bleed some of its time out. Time is a given. The one thing that isn't a given, okay, is supply and demand. Some people call supply and demand and the effective supply and demand, they call it volatility. More appropriately, they call it implied volatility. But in the end, if everybody looks at this stock, what's the name of the stock? Stock! If everybody looks at stock and says, man, this thing is crazy. Okay, the CEO is a few fries short of a Happy Meal of that company. Okay, this is like WeWork. If stock is a really, okay, if it's just crazy company like Tesla, yeah, see, a few fries short of a Happy Meal. Now we bring up Elon Musk. All of a sudden, the volatility is going to go up. The supply and demand is going to go up. That option's not going to be trading for $3. That option's going to be trading for $6. That option's going to be trading for $9. Are you with me? Okay, because what you want to understand about this, okay, what you want to understand about this, and I'm literally going to blank the screen. I want to bring it back up over here, okay, is that stock is trading right at 100, and that 100 call is trading for $3, and the 100 put is also trading for $3, and this is good for a month. When you add up the at-the-money call and an at-the-money put, when I say the money, these are the options, okay, that are trading right where the stock is. So 100 call, 100 put, the stock is trading at 100. When you add up the call and add up the put, it equals what? $6. See, the implication here is when you add the call to the put, that this stock is implied to move up or down $6. So all of a sudden now you're taking two option prices that were seemingly like, oh, I'm getting bullish and I'm getting bearish. No, there's an implication of how far the stock can move within a given period of time. That given period of time is 1 month. Now, okay, now you can take that $6 and you can say, hey, listen, this stock is expected to move up $6. That's a 6, okay, or down $6, and it's going to stay in that range 68% of the time. Okay, that is how expected move works. It's all off of supply and demand of the options. Now, we're going to go through this again and again and again and again, so don't panic, and then we're going to show you actually how to use it. Expected move defines what's termed a 1 standard deviation move. 68.3. By the way, people always ask this question. They go, where did that 68.3 come from? It basically means standard deviation. You know, in this world, everything can fit under a deviation curve. Am I right? I mean, you think about it. Like, there's really, really good drivers up here, and then there's really, really bad drivers. Then there's Los Angeles, somewhere down here. Come on. Florida's like off the... But listen, everybody thinks that everybody's a terrible driver, which means we all kind of suck and we're in the meat of the curve. So 68% of us fit right into the meat of the curve. You got to love that. Anyway, that's 1 standard deviation. Therefore, there's a 68% chance of probability of the underlying closing inside the expected move by a designated expiration. Yada, yada, yada. Expected move is a probability of expiring. Hey, let's just show you some examples. You know, I put the definitions on here. You know why I put the definitions on here? Because there's engineers in the world that need to know the definition. Okay. There's engineers. I blame all of them. Now we're having fun. Expected move. Listen, not every trading application has expected move. You can use the at the money straddle as an alternative. Now, some people, again, they go, I don't even know what an option is. Don't worry about it. You will. Okay. You will. Oh, and you're going to come to love this because you're never going to look at stock the same once you understand expected move. I'm telling you, you will never look at a stock the same. You're like, why have I been trading Tesla? Why have I been trading Netflix? How could I not know about this? People have lost hundreds of millions of dollars, at least that I have personally seen, because they don't understand something simple like expected move that's been explained to you in the last 20 minutes. Listen, the straddle price, okay, and expected move. I just want to show you this because, again, this is Netflix. By the way, this is a few days ago I took this screenshot. Netflix a few days ago was trading right around 274. It's pretty much 274 on the button, right? So the expected move on an option chain, look, on an option chain, this is on Thinkorswim. It's right there. It's $31, $31. Well, instead of, if you don't have this equation, like the equation of expected move, it's not a total geek equation. You know, I could show somebody how to do expected move equation in a couple of moments. By the way, the equation on Thinkorswim, I'm not joking when I said we refined that over about 6 years. There's about 6 years that went into refining that. Now, instead of, using this highly detailed equation, you know what you can do? You could just add the at the money call to the at the money put, and it comes out basically to what? Right there. It's almost $30, right? So right there, it's almost $30. That is almost the same as that. As I kind of continue on, listen, it's not critically important that you know exactly how to add the at the money straddle. Okay? That's not critically important. What is critically important at this point is that we understand that it's implying what this stock is going to move. That's what's important to begin with, right? Shall we continue? Let's go to some expected move examples. Let us evaluate several short duration, weekly expected moves and make sure that you know what you're looking at. Okay. It's just a couple of examples. Listen, I just threw a few screenshots. All right. Let's start with Apple. Anybody ever heard of that stock before? Okay. So there's this company called Apple. By the way, the trading application that you're showing right now, okay, this is Thinkorswim. So during my career, I was involved literally in build number 1 of Thinkorswim. A lot of features and stuff that I had input on there, but I like look back on all of that. I spent literally 15 years, and I worked in the trading. I worked was in a group called the Trader Group. What we did is we built Thinkorswim, but I actually ran the education side of it. But over the years, we got to put a lot of input into the platform. But I look at that and I look back on it, and all the technology in here now, it's awesome, but it's also been commoditized. Almost every single brokerage firm has this stuff now. So I don't want you to feel like I have to have Thinkorswim or I have to have this. Relax, people. Okay. Everybody's got this stuff now. So, hey, look at Apple. Okay. And Apple's trading at like $235. I just want you to know this. Over the next 3 days, what's this stock positioned to move? Come on. What is it? Okay. What is it? What's this stock positioned to move over the next 3 days? You tell me. I'm going to make sure you got it. Okay. There's a couple of different ways you can figure that out. You can come over here to the right-hand side, and you go, it's positioned to move just over $4. Okay. Now, does it tell you which way? No, it does not tell you which way. With the way this works is it goes, I'm going to move higher or lower. Okay. Let's say plus or minus. Let's just call it $4. $4. So it's going to move $4 higher or lower. Okay. And you stop and go, oh, that's interesting. But maybe you don't have that little equation. Maybe you're on a different trading application. By the way, most of them have it now. I mean, it's gotten really, really good. So we're trading right around 235. Just add these calls to these puts. What do you got? $1.75, 210, yada, yada, yada. You're pretty close to $4. I'm using special math. You're pretty close to $4. And that's the way it works. Let's do another one. What do you guys want to do? Another stock. Okay. What do you got? Here, I'll put in Tesla. Why am I putting in Tesla? Because I want to torture you and myself. So Tesla's kind of fallen off everybody's radar screen lately. But the reason that I'm showing you Tesla, okay? First of all, Apple over the next 3 days, Apple is a $235 stock. Tesla's a $257 stock. But they're kind of comparable, right? Because it's 235 and 250, except Tesla, okay, is Mr. Toad's wild ride. It is. Look at it. It can move almost $9. Almost a $9 move. We'll call it $8.70. But again, if you didn't have that, you could just add the calls to the puts. Comes out to about $8. Again, using the options is no different than using like over here. And now, you know, when you learn that stuff, you're like, wait, what can I use this for? Oh my gosh, you could use this for so much. You can use this to gauge risk management. You could use this, but what we're going to use it for, okay, vastly different. And that's what's going to blow people's minds. I like that. Somebody said, what about NVIDIA? What about the SPX? What about the spiders? Okay, what about it? All of them have this, as long as the product is, you know, trading. As long as it's trading, it's got some options. Okay, next thing, why expected move matters. Listen, what you have to understand about expected move, this ain't some line drawn on a chart. This is not a Fibonacci retracement. I got your 618 right here, buddy. Listen, it's not like that. It's not a MACD. It's, you know, and I'm not picking on charts right now. I'm really not. But what you have to understand, okay, about expected move, and I gotta hammer this into you, it's about skin in the game. Okay, you know what? When people ask, like, why is that expected move working so much? You know, a moment ago I was talking about some stock, right? And that stock had a $6 expected move. That means that stock can move up $6 or down $6. And everybody asked me, why does it do that? Like when I say why, you'll look at this stock and it will literally move up $6 or down $6. You're like, that's amazing. Okay, it's not amazing. It's based on billions of dollars at risk within a live market. Okay, this isn't like a line. Again, people are like, I'm going to draw me a line on the screen and the stock is going to go there, and I'm gonna call it a 618. You know what? You draw enough lines on your screen, stuff's going to move there. But a $6 expected move, there's billions of dollars drawing the stock towards it. That's what people miss. Okay, that's what they miss. Now, here's an example. Okay, today's trading session, would that work? Whereby the markets adhered directly to expected move. Now, let's get to it. Expected move before the earnings. Hey, why not? Okay, I'm talking about something called JP Morgan. I don't care whether you're bullish or bearish. I really don't. All I want to show you, okay, is that first of all, this was JP Morgan, and I took a screenshot. Okay, that screenshot right there, okay, was yesterday. Is this pertinent enough for you? Okay. When I say, is it pertinent enough? I want to make sure that everybody's on the same page and you understand how important this stuff really is. JP Morgan, okay, yesterday, and by the way, this literally the screenshot, okay, was taken from yesterday end of day data. This is a screenshot of the expected move on JP Morgan Chase before the earnings announcement. Before. Note the $3.53 expected move. See? Right there, it says $3.53. Now, I'm not telling you that the thing is going to move $3.50 and go stop. Okay, I'm not telling you that. But I'm telling you there's an incredibly high probability that it comes up or down. You don't know which direction. Tags it and then continues on. There's an extraordinarily high probability that it tags the edge of the expected move. But again, this is JP Morgan. Okay. So JP Morgan, if you looked at JP Morgan, right, this is early in trade. What the three lines represent, okay? By the way, I drew a line on the chart. This is where JP Morgan was before the earnings. This is the expected move, okay? Meaning that what was the expected move? It was plus or minus $3.53, plus or minus $3.53. You didn't know if it was going to go higher or lower. Stock opens and goes higher. Now, I took a screenshot this morning of it because it literally hit the edge of the expected move. You're like, whatever. And it was up. By the way, when I took the screenshot, I was very specific. It was up $3. If you look right there, it was up $3.48. Is that close enough for you? Is it? Just want to make sure. Because then if you look at the stock right now, I took this screenshot, okay, right before we started tonight. I took this screenshot right before we started. Take a look at the time. Okay. By the way, I'm on Pacific time. Take a look at the stock. It's up 351. Now that crap, you can't make that up. All right. Those lines on that screen represent the expected move. You just saw the expected move from last night. Okay, was $3.53. Take a look for yourself and move to the expected move. Now, here's another one. It's Goldman Sachs. By the way, I didn't just pick financial firms. It was just the financial firms released. I didn't have a choice, right? The financial firms just released. This is Goldman Sachs. Now, Goldman Sachs had a $7.36 expected move. Okay, Goldman hit it and then pulled up after it. But I wanted to show you Goldman because this is, by the way, that's $7 higher and $7 lower. Okay, it's interesting stuff, isn't it? $7.36, but it hit it to the penny. To the penny. I drew this exactly $7.36 higher and lower. Okay, it hit the edge of the expected move and reverberated back up. And I cannot stress to you enough, this is what earnings are really about. You don't have to be right, okay? And what you have to understand, when I say you don't have to be right, got to understand about this, does this expected move knowledge help provide a tradable edge? I mean, you guys answer that. I'll let you contemplate that one for a second because I can show you example after example after example on this. Because what people are thinking right now, they're like, it's pretty cool. Okay, but how do you do it? Because you ain't seen nothing yet. You don't actually know how to trade it. Well, I'm going to show you how to trade it. Application to the expected move. Our knowledge of expected move became really apparent around the SPX, the S&P 500 index, years back. So the growth of algorithms, the growth of algorithmic trading, computerized trading, it's created a very definitive expected edge. What you get, all right, what you have in the marketplace right now, this expected, what I term expected edge, is you have earnings announcements bringing heavy trading volumes into the option markets. Because there's heavy volumes, okay, are in the option markets, it's creating and solidifying the expected moves. And the algorithms are absolutely freaking perfect, okay? They're perfect. They're efficient. And they drive the stock right to the edge of the expected move. Stocks adhere deeply to expected moves surrounding earnings announcements. I cannot stress this enough. So, of course, everybody's going to ask, does this stuff really work? So let's look at what the expected move on a few stocks happened to be the day prior to earnings and see if the market's move is expected. Now, I just did that a second ago. I did it a second ago, but I'm going to show you in a previous earnings announcement. You ready? Here's Apple. Okay, and I want to bring you back. I'm bringing you back. Here's a throwback. This is April 30th. Now, time out. Okay, I'm showing you a screenshot of April 30th for a reason. Okay, not because I just wanted to show you. Oh, look, the stock is supposed to move on the April 30th earnings. That's just a couple months ago. It's supposed to move $10 higher or lower. I'm not showing you this because it's going to work out perfectly. I'm showing you this because I did the trade. I actually traded this, and I will show you what happened when earnings came out. Well, let's actually show you the chart. Here is Apple the day before the earnings. Okay, there's the jump higher. The stock roughly moved from like 200, shot all the way up. And here, I just messed it up over there, but the stock actually shot all the way up almost to 215 and pulled back in, okay, right into the 210 level. So what were we expecting Apple to move? Because this is important. We're expecting it to move $10.45. What did Apple do? Shot up, pulled right back into the edge of the expected move. Now, just remember the Apple, okay? Remember the Apple example here because everybody always asks, does this stuff really work? Proof's in the pudding. The proof is not me showing you some little chart. I think the proof would actually be me showing you an actual trade, which I'm going to do here momentarily. Next one, Snapchat. Snap. Okay. So Snapchat was a $14 stock. Okay. Snapchat, here it is. This is actually the last earnings announcement. It was poised to move $2.11. Now, just do some quick math. Okay. $2.11. Now, need I bring a calculator into this? Because I will. You guys want to see a calculator in here? Watch. Okay. If you took this and said $14, okay, and 83 cents. Let's do plus, because I'm going to tell you right now, the stock's going to move. Plus $2.11 equals $16.94. So the edge of the expected move would be about $16.94. What did the stock do? The very next day, okay, you're like, oh, it shot beyond that. Look, I said it was going to go to $16.94. I missed. It went to $17.61. Wasn't perfect. It wasn't perfect. It's not always perfect. But holy crap, that's close, okay? Give me a break. The next one, Caterpillar. Caterpillar is poised to move $5, okay, and 64 cents. Let's bring up Mr. Trusted Calculator again, because this stuff is important. 138, okay, 10 minus, let's do $5.64. I'm telling you right now, minus $5, okay, and 64 cents. I know this one went down because I traded it. The stock should move somewhere around 132.46. Where did it move to? The very next day? Oh, 132, almost on the button. You realize you're trading a $130 stock? You couldn't pin the tail on the donkey any closer than that. I'm within a few pennies of it. It's gold. I'm on. I'm just absolutely on. Okay? All right. You're going to learn right now, we move in predictable ranges via earnings announcements. You get that part. Now show you how to actually make money off of it. How does one profit from these types of moves? Okay? That's what's important, is how to actually profit. You got to learn to position yourself around expected moves. Let's get down and dirty. How do you position yourself most effectively around these earnings expected moves without absorbing large amounts of risk? You know what this is? Okay? You're like, yeah, you're crazy and that's a butterfly. I get it. I am crazy and this is a butterfly, because that's exactly what we're going to use. Without going into too much detail, because I know that there's a lot of people tuned in this evening that have zero options experience. And if you do, that's fine. Now, some of you already know what a butterfly spread is. Great, okay? This what I'm doing tonight ain't about the butterfly, okay? It's about how to build the right trade around the expected move. So I'll go back to my original example. In that original example, we had stock, okay? And stock was trading right at $100. What was the expected move? We're going to call the expected move now EM. EM stands for expected move, is plus or minus $6. So here's a stock, okay, where you can actually go after an expected move that's the stock's supposed to move up $6 or down $6. And guess what? Earnings is coming. It's coming. Okay, so what do? I lay a fly right into this. What a fly basically does is it takes a very cheap outside shot, okay? And if we hit anywhere around a $6 move higher or lower, okay, I'm going to hit degrees of profitability. And this is something like, you know, people are like, oh, back up. Listen, you give me a couple of hours. Obviously, I could teach in depth, but I just want to show you the strategy is you have a high probability of going up $6 or down $6 and literally pegging the edge of $6. I mean, come on, there was a couple of earnings announcements today, just a couple of them. I pulled up, Goldman Sachs, I pulled up JP Morgan. Two of the earnings announcements hit smack on. Now, I could have gone into Citigroup. I could have gone into Wells Fargo, okay? And these things are all teetering right on the edge of expected. It doesn't always work, doesn't have to always work. But you see these little trades out here, these things called butterflies, okay? They're going to be negligible in price. Some of them are going to cost like 40 cents. So if you're totally wrong, who cares? They can cost 40 cents, but you can make as much as like $5. You could even make $10. You can make more than that. Depends on the underlying. Something like Amazon could be huge. All I'm trying to do, okay, with this, and I just want you to understand the logic right now. Don't worry about every nuance. I'm trying to peg, all right, if it's going to move up $6, I want to lay a strategy so that my P&L explodes higher if we move up the $6. Okay, what happens if we get bullish and the stock moves down? Oh, I don't know. Who cares? Let's say we lose 40 cents. Oh no, I lost 40 cents. And you do it again, and you do it again, and you do it again. Because you know what? In a strategy like this, you only have to be right maybe 1 out of 4 times. Sometimes even 1 out of 5 times to be right and to still make money on it. That's what people don't get. And then everybody goes, those of you that understand butterfly, they inevitably somebody goes, the commissions could get expensive. Well, guess what? The brokerage firms took care of that 2 weeks ago, didn't they? 65 cents a contract, baby, everywhere. If you're an active trader, it's even less than that. It's a total free-for-all right now, okay? You have got to learn how to use butterfly spreads around earnings announcements, and I cannot stress enough this evening, okay? You know, these trades, they've worked in the past, but now because the commissions are so low, it's just amplified everything. It's a level playing field between you and professionals, and I'm telling you, the expected moves are going to work even better now because the commissions are down. Because now people are going to be taking shots literally on the edge of the expected move. Okay? That's what it's about. This is why you want to use earnings butterflies. You got to learn this stuff. It's a highest rate of return, okay, surrounding an earnings announcement, bar none. Okay? There's no other strategy that's going to have this rate of return surrounding an earnings announcement. It's extremely low upfront cost. You know what? So low that when the trade goes against you, you go, let it go. Let it go. It doesn't make a difference. Number 3, you never need to buy or sell the stock. Obviously, there's no need for the stock. And number 4, provides really a consistent earnings trade. You don't have to continually monitor it. Put it on, leave it. Leave it alone. Okay, if you want to watch the next morning, oh, spectacular, but you don't have to, okay? You need this in your life. You need it in your life because if you're going to trade earnings, it ain't easy. Like it's a wild time. Stock goes up, stock goes down, but they adhere to expected moves, okay? Listen, earnings, butterfly spreads give you the power to trade massive stocks around earnings with pennies at risk. You want to trade an Amazon, you want to trade an Apple, you want to trade a Google, you want to trade a Priceline, okay? I mean, what are you going to do? You're going to go out there and trade like a Google and you're going to get run over. Go out there, put a couple of pennies on the line. That's it. Okay. These butterfly spreads are going to help you do that. Listen, I mentioned earlier, what I was giving you as examples, they're not examples. Those were live trades. Okay. They're live trades. Listen, a live earnings fly trade example. Okay. The first one that I'm going to give you here, the first one is an earnings fly. All right. Remember, back a couple of slides ago, I talked about what? The April 30th. And I said to you, hey, I'm showing you this not because it's an example. I'm showing you this because that's the exact date and time. By the way, every single trade that I am showing you today was done live in front of TheoTrade clients. I trade live every single day. Okay. I traded live today, except that my internet was having issues earlier today. That's the plight of the trader. But Apple, okay, on the 30th of April, I paid 72 cents, okay, debit for the butterfly. So every $72 invested, I got back $232. It's a 222% return, okay? There's actually the credit. So this is the entry of the trade, the exit of the trade, the exact time. I always tell people, listen, I am on Pacific time, at least this time of the year. I'm in Arizona, so we don't change our clocks. All right, moving along. By the way, you know what? I just realized it. So it's $72 invested. If I did one contract, it's $72 plus commissions. What are commissions? Who cares? Because they're next to free these days. But what happens if I did 10 contracts? So if I did 10 contracts, I think it's worth mentioning over here because a lot of people, that ain't worth it. Good. It's not worth it. Good. But it's 10 contracts, 720 would equal $2,320 return. Not bad. Next, that was Apple. Here's another one in Apple. Okay. Why am I doing another one in Apple? I don't know. I do the same thing every single month, every earnings period. I actually do, like, depending upon the trades, I do the same underlyings again and again and again and again to the point that people get nauseous. They're like, I'm really sick of Apple, Don. I'm really sick of you trading like Tesla. I'm really sick of, I trade a lot of index products too, like XLF. I'm really sick of that, Don. You know what? Really? Are you sick of making money? Because I just have to ask that because I'm going to trade Apple as soon as the earnings come out again. Okay. Later this week, I'm going to take a shot probably in Netflix as well, which is coming tomorrow. So I do the same underlyings. Okay. Repetition is a good thing in this business. It should be very boring. Okay. Anything that you're good at gets boring after a while. All right, here we go. July 30th, 52-cent debit in Apple. Okay. Exited it August 2nd. $1.40 credit. Every $52 I invested, I got back $140, so it could be $520 to $1,400. It's 169% return. Okay. The reason I'm bringing this up, I just want to show you the previous trade again. Okay. In the previous trade, look, okay, Apple barely did anything. I was doing the 207, 212, 217. Okay. In the next trade, I'm doing like the 205, 200, 195 puts. So one of them was bullish. The other one was bearish. Kind of fun. What our members are saying. Thanks for last night's video on Apple earnings. I set up the same trade. Okay. And it looks like max profit tomorrow. Just wanted to send you a big thank you. So these are trades, as I said, this Apple trade and this Apple trade were done live. All right, onward and upward. Here's a cat fly. Cat fly. What is that? It's a caterpillar, okay? It's a caterpillar earnings butterfly. And if we take a quick glance at this one, I set this one up on July 23rd, okay? Closed it on July 25th. 36-cent debit. I literally paid 36 cents for it. That's it. It's not a big butterfly. It's a $3 wide fly. Every $36 invested, I got back 101. It's 181% return. Okay. If you had done 10 contracts, it'd be like 360, just over $1,000. It's not bad. Not bad at all. Again, what our members are saying. Don, okay, of course, is the driving force, a wealth of knowledge, of information. So glad he's doing what he's doing. He's adding a lot to the world of online trading education. The class today on expected move was worth weight in gold. Please tell him I said so. All the best to you and your position over there. Best, John G. So I wanted to throw that out there because I talk incessantly about expected move, and everybody should recognize that, first of all, you should be using it, and secondly, you got to learn to build trades around this stuff. Now, let's continue on, okay? Earnings fly. This is the snap one. I showed you earlier kind of the charts and, but these are the actual trades. So here's again, by the way, I have a couple of trades that I did on the 23rd. You'll notice a lot of my earnings flies I do the same day. Who cares? This one I paid 11 cents for and it was worth 30 cents. Am I knocking it out of the park? It was $11 invested. I got back 30. It's 100, okay, and 73% return. You could have, okay, a couple grand in your account. There's no one that's attending right now, okay, that is not capable of doing this. And I love, somebody just came in and Bob said, isn't a butterfly a directional play? Okay, maybe. I have to leave something, Bob, to the imagination. Something to the imagination. I can't give you everything. I can't give you everything because you have to, you have to figure out a couple things, right? Or we could actually teach you a couple things. What our members are saying. Listen, I'm going to paraphrase this one, okay? I just wanted to thank you, okay, for month 2, okay, which is month 2, the TheoTrade team. Love what you guys are doing. Explains that he actually took a course through a company called InvestTools. InvestTools was actually owned by TD Ameritrade and Thinkorswim. That InvestTools course cost this gentleman $25,000. He paid $25,000 for a course. And you want to know the irony of the $25,000? Okay, myself and several of the individuals here at TheoTrade, yeah, we actually wrote the books for this. Okay, one of them was actually Brandon Chapman, but I actually ran the entire education division at one point. Okay, the reason I'm throwing this up here is $25,000. What we do here at TheoTrade absolutely, unequivocally smokes it. Okay, and I also wanted to throw this up here. You're so correct when you say capital preservation is the key, at least for people like myself. I'm learning as fast as I can and looking forward, okay, to the time when I'm fully up to speed. Takes a little bit of time, right? But I just wanted to highlight a couple of portions of this particular email. It's also that email from Ron. It's about as recent as it gets. Next, okay? People look at this and they go, I got to figure it out. I got a lot going on. No time, no problem. Each and every trade shown today, the examples I showed today, okay, were displayed live at TheoTrade. We will spoon feed you trades. Initially, everybody needs some trades. We trade live throughout the course of the day, but not everybody can tune in all day. So everything, okay, in terms of those trades is archived. The trade results that we're showing you, it's perfect for part-timers. And this earnings fly, okay, and this earnings butterfly, it's hands off. You can even use, okay, set and forget order types, but that's called a good till canceled orders. A fraction of your time is enough to see some results over here. Trading earnings is usually like so intensive. It's not. You put something on for, you saw 11 cents. Let fly. Let it fly, okay? Here's a couple of characteristics of these trades. The attributes of the earnings fly spreads are undeniable. You never have to buy the stock. You define your risk, okay? And it's minimal risk. I mean, look at the trade down below. When I say define your risk and it's minimal risk, hey, that's an 11-cent trade. This is the snap trade that I actually placed, right? Risk is limited to precisely your comfort level. You don't want to do an 11-cent trade. You want it to be 30 cents. You don't need to use a stop order. You can have profitability can be what? Extreme percentage returns. It's the perfect spread to produce risk of a stock portfolio. How can I do that? You can actually use this trade, okay, to help reduce the risk of a stock that you already own. You're like, what? If you owned Caterpillar, you could have used the butterfly to offset, okay, the stock position in Caterpillar. It's also an excellent tool for those seeking returns to build a smaller account. I mean, all of the attributes over there. But of course, people are, apprehensive, and you're apprehensive because you got to go out, you got to build it. You got to be able to build this little thing, right? Building the earnings fly. First and foremost, do not allow options to intimidate you, right? Listen, the butterfly spread below, it's for an 11-cent debit. But you got to realize, like, between expected moves and earnings flies, this thing, okay, it's like a giant power saw of the markets. Used correctly, extremely effective. Used incorrectly, you're going to cut off a couple of fingers. You have to realize, okay, the power, okay, of the butterfly. You got to realize, though, that you have to know every little nuance to make this work right for you. And that's why somebody said, isn't that a directional strategy? Isn't it this? Isn't it that? Listen, you could do earning fly spreads. Everybody in here can do these spreads. I mean, again, they're, negligible costs. Maybe you don't know options. Maybe you have limited options experience. It's fine. Do not let the options intimidate you. Okay? That's rule one. A lot of you have options experience, but don't let it intimidate you. Okay? You need these strategies, though, for the foreseeable market future. We can show you how and when to place earnings fly spreads. It's a matter of a couple of hours. Listen, I'm not going to hedge around that. You got to spend a couple of hours, and you got to commit to a couple of hours. What we do here at TheoTrade, okay, is we create detailed recipes for every strategy, including earning fly spreads, okay? And what I mean by like detailed recipes for every strategy, including like earning fly spreads, it's just like baking a cake. You know what? Baking a cake without a recipe, people, you could try to do it, probably won't taste very good, but I also, when I talk about like recipes and so forth, that is what we do here at TheoTrade. We literally give you a step-by-step, like a recipe. Step one, what does it take to make a cake? I don't know, a little flour, a little sugar, a little of this, a little of that, okay? The same thing is true, though, of a trade. Listen, this is what you need to know to successfully enter and exit earnings fly spreads. First thing, number one, what makes a viable earnings fly candidate? You got to know what candidate. You're like, oh, I know, something with earnings. Yeah, but you got to give me more than that. You have to know precisely what makes a viable candidate. And I'm going to tell you, there's actually quite a bit that goes into that. Number two, what volatility should I seek out? Should it be high volatility, low volatility? Okay. Number three, what options expiration do I select? Number four, what should be the delta of the option I buy? Number five, what expected move do I use? And how do I go about determining the positioning of the fly? Okay. Go on to six. How do I build the trade? Oh, you got to build the trade. You got to pick the right strikes. What's the amount of the right amount of risk for me? Listen, all of these variables, and that's what it all comes down to. Trading is nothing more than variables. Stock can go up, stock can go down. How would I position the trade? Let me show you what we do here at TheoTrade. Well, TheoTrade creates recipes in trading. Okay. What we really do is we answer all of the what ifs. What might be a good stock or ETF candidate for an earnings fly? What's the correct options expiration cycle to buy my earnings fly? How much capital do I commit? We'll tell you that. What's the strike price options? How many do I buy? How many do I sell? We tell you that. And growing a small account, what should my allocation be? Yeah, we tell you that. We have all of the answers, okay? We build recipes with definitive criteria. We actually have a checklist for each strategy, each unique variable that you're going to encounter. I mean, this is like, it's a pre-flight checklist. But then once you're in the trade, what can happen to you once you're in a trade? Stock can go up, stock can go down, expiration can come. Oh my, every variable that you can encounter along the way, we actually have like a little flow chart. If X happens, you do Y. If Y happens, you do Z. And it continues on and on. That's what these checklists are designed to do. And when I say a checklist, like you literally go through and you go, step 1, check, step 2, check, step 3, check. You got to go down the list. Okay. When you get into what we term criteria, listen, anybody can go out and figure out, go Google right now. Oh, you can figure out what a butterfly is, but it's not going to tell you how to actually make money around it, right? That's what we do here. TheoTrade is the answer to your questions. We'll give you the right probability for the trade. How many option contracts do I trade for my account size? When do I close my earnings fly? What if the stock sells off big? What's the correct return for the strategy? What if the stock rallies massively? Can I fix a losing trade? We'll give you the how, the when, the why, at what price. It's just the beginning of the variables you're going to face while trading an earnings fly. It literally is just the beginning of those variables. Now, as I was saying a moment ago, you can read what a butterfly spread is. Go Google it right now, right? You might even know it already. You already know what a butterfly is. You know how to build it. But you need TheoTrade's recipe for success, okay? And what that amounts to, 20 plus years of trading experience, access to client order flow for 15 years. We viewed and studied millions of trading accounts, ran education for over 15 years, okay, at a firm with the largest options order flow in the industry. So we're all clear. Both Thinkorswim and then TD Ameritrade had the single largest retail options order flow in the entire industry. We studied it, and that's where a lot of these recipes for success, that's where they originate from, okay? It's from watching order flow. I know the mistakes that people make when they trade, okay? Criteria becomes the recipe for success. The following strategy and corresponding criteria, it's the utmost attention to detail. We spent years fine-tuning this trade setup and criteria. When we approach the section on criteria, you got to follow the steps to build the trade. I mean, you got to follow the steps, okay? We have a course coming up. It is this Saturday. Now, that course coming this Saturday, it's live. We're doing a 3-hour course live this Saturday. I am the trade instructor. The class slide deck that includes entry and exit criteria, that checklist, is available the morning of October 19th. The course will be recorded and archived immediately. When I say archived immediately, okay, literally before I finished, we already putting the archives up over there. We have, okay, TheoTrade mobile and web. Mobile is both for Android and iOS. We have a mobile application. You can sit here and watch this course at 30,000 feet. But if you want to attend live, and I encourage people to attend live, it's 9 a.m. to 12 p.m. Central Time. That's 10 a.m. to 1 p.m. okay, Eastern Time. The class is coming up, as I said, this Saturday. It's $497. Okay. Now, hang with me for a minute because there's a couple things I told you. Number one, I want to show you some of the curriculum of the class. And number two, I promised everybody I have, okay, the earnings indicator that I am going to provide to you here in a few minutes. I'm going to get you the earnings indicator. I'm going to take you directly to the website to be able to find the earnings indicator on there. The class is coming up, as I said, this Saturday. It's $497. Now, with that, this is the curriculum. This is the guide to maximum edge trading earnings. What we're going to cover in this class is how to use earnings butterflies, okay, like a seasoned trader. Generate consistent returns during earnings season. How you can actually predict with a high degree of probability where the stock price is going to go after an earnings announcement. How you can trade even the most wild earnings announcement with extraordinarily low risk. Earnings butterflies, they're great for small accounts, okay? They're going to take minimal risk and generate high returns. How to use defined risk reward strategies. You're not going to be able to, people constantly complain about this. Right here, number 5, I got to stress this. You're not going to lose sleep over what? Oh, I had a 40-cent butterfly on. I had an 11-cent butterfly on. The craziest butterfly, might cost $1. You could do one contract. You have $100 at risk. You're not going to lose sleep over this. And that $1 can turn into what? Could turn into $10. That's the kind of thing that we're doing over here. Number 6, how to build your own fly. Listen, are we going to spoon feed you some butterflies? Absolutely, unequivocally, yes. But you got to learn how to do this. You got to learn how to do it because you know what? You don't want to sit there all day and be like, is he going to spoon feed me yet? Okay? Go out there, put it on. It's easy once you follow the steps. Which stocks make the best candidates, what strikes, what expiration give you the highest probability, when to open, when's the best time to close. Why trading earnings announcements does not mean you need to be glued to your screen. Earnings butterflies can be done in a retirement account. By the way, I trade my retirement account now. That's what I'm trading in. You'll see that. Okay? You have to have a minimum of $2,000, but retirement accounts, listen, number 12 over here, yeah, you have to follow the recipe to build a trade. And I stress that again. Now, again, the class is $497. People are going to be blown away by what we do in 3 hours. Blown away. You think about what we've just done in the last hour already. Give me 3 hours, get us focused, okay? You guys are going to absolutely kill it in understanding this stuff after 3 hours. Now, everybody turns around and goes, I want a bonus. And we're going to do just that tonight. Listen, TheoTrade goes beyond one class or one indicator, okay? People, you want everything. You want everything to trade. You want everything to invest. You want it at one place. You want it at one price, and you want it now. That's what everybody wants. They want instant coffee. They want instant tea, and we're going to give you just that. We're literally going to give you just that. Wait till you see what we're going to offer you this evening. Bonus number 1, we're going to give you access to over 85 trading classes. By the way, this is all included, okay? And before I go any further tonight, I'm going to tell you right now, the class is a class. It is not a membership. You are not about to sign up for a membership. You enroll for a class, and then we'll give you 85 other classes too. You okay with that? All right? I mean, listen. Okay. By the way, somebody's asking about, earnings. How long is it? There's earnings all year long. There's always something going on, okay, in terms of earnings. Not everybody releases their earnings in 3 weeks. Earnings all the time. But as I was saying over here, it's not a membership. We're going to give you access, though, to over 85 classes. So when you buy the class today for $497, you're also going to get all the classes in our archive, all the classes that we've ever done. Okay, all of these are available immediately. First of all, this class right here, the Guide to Maximum Edge Trading Earnings. Listen, that one, that's coming October 19th. Okay, then you also get the In-Out Spreads course. It's Guide to Small Account Growth. Okay, how to collect income being short. The Next Big Short, Guide to Selling High Probability Spreads, Iron Up, that's Iron Condors for income, Selling Premium, Minimizing Risk, Survive and Thrive at Extreme Volatility, Day Trading, NASDAQ Futures, Covered Calls, Income Generation, Essential Skills for Consistency, Top 10 Skills, Pairs Trading. Listen, there's 85 courses. You name a genre of trading, we've got something on it. There is nothing out there for any amount of money, even comparable to what we're doing here in TheoTrade, bar none. Okay, we'll put our money where our mouth is, and I'll explain that in a minute. It's over $9,000 in classes alone. Because I realize everybody, they go to some webinar and somebody's like, you sign up for this, and you got to sign up for this, and you got to sign up for this. Forget all of the crap, okay? Basically, you enroll for a course, you get all the courses that we've ever done. Now, these are the TheoTrade instructors, okay? Listen, I didn't do all 85 courses, okay? I don't understand every genre of trading. We bring in specialists. Jeff Bierman, he's the analyst. Trader. He's also the former chief market technician for TD Ameritrade. If you've ever been on Thinkorswim charts and you appreciate it, appreciate Jeff Bierman. By the way, Jeff Bierman, he actually moonlights with TheoTrade. He's also a full-time professor, okay, at DePaul in Chicago. So, by the way, at DePaul, if you want to go to DePaul, Jeff Bierman, it's $42,000 a semester, okay? You get access to every course that Jeff Bierman has done here at TheoTrade. Next one, Matt Williamson's Market Neutral Premium Selling Option Strategist. Next in the list, Corey Rosenblum, Senior Strategist, our resident swing trader. Next, Brandon Chapman. He's our CMT, Macroeconomics, Technicals, Fundamentals. Okay, Brandon also is a Forbes contributor. He also wrote the book, okay, that people paid $25,000 for, and he puts together a lot of our course materials here at TheoTrade. Next in the list, Steve Slim Miller. He's got 43 years, okay, already behind him. Veteran stock options and futures trader. Last but definitely not least, this is our intraday specialist, NASDAQ futures trader, none other than Tony Rago. That is the team here at TheoTrade, okay, that put together the 85 courses that are currently available that we will give you access to now, today. You will have access to all 85 classes. Start watching them tonight. That's not the only bonus. The next bonus, it's an all-access TheoTrade VIP membership pass free. Now, I want to clarify something. I know that this says membership. We're not selling you a membership. We're done with that. Okay? Don't worry about it. We're going to give you 3 months unlimited access to TheoStream. Okay? That gives you access to the live trading room. We broadcast 6 hours a day. All of our traders, we give you real-time trade ideas. I'm one of them. I'll be on for an hour in the morning. Real-time market insights and analysis. We email out trade ideas. We have 5 distinct portfolios. We do updates now for those portfolios. There's video updates, okay, for some of those portfolios now that come out on Fridays. We also have daily coaching sessions. There's timely topics and stocks and options and futures. And all of this is included. We even answer your emails directly, meaning that the instructors, you can say, I want to have Corey Rosenblum answer this. I want Don Kaufman to answer this. We answer a couple hours of emails a day. Not a big deal. There's nobody else that does that stuff. And in fact, if they do, they're going to charge you a couple $1,000s a month for that kind of, access. I think it's access to $997 support, trades, and insight. That's part of the bonus of taking the class. You're going to take a class Saturday. Again, you're going to get access to every course that we've ever done. You're going to get access to all these instructors. You're also going to get access to the live trading rooms and 5 distinct portfolios. I'm not done. That also is going to include 59 proprietary indicators and scans. Auto expected move. Auto expected move is the most complex think script ever written. Earnings expected move indicator, which I'm actually going to give you here. This one I'm going to give you tonight. Gravity points, TheoTrade RSI, Quantix, NQ levels, okay? Next generation squeeze indicator, TheoQuant. I'm just going through a couple of them. SPX expected moves. It's $1,800 of indicators. I said, people, you want everything, okay? You need to invest in trade. I mean, literally, we include everything you need to invest in trade. We have classes. We have coaching sessions. We email access to the instructors. We give you a live trading room with live trades in it. We have indicators. We have scans. We have mobile access 24/7. Okay? You can access any archive off of an Android, off of your iPad, whatever. Everything that you need to succeed. We've literally built TheoTrade. We've built the Netflix for traders. You name a genre of trading, we've got an archive for it. I'm going to show you in a minute. I'm actually going to take you into TheoTrade and show you what it looks like. Right? Listen. Tonight, it's $297 for 3 months. It is not a membership. It's $297, okay? And I'm going to show you again exactly what that includes. It's the guide to maximum edge trading earnings. That course is coming up this Saturday, okay? It's October 19th. I'll bring up the page in a minute. Access to 85 trading classes, all available immediately on demand. There's also going to be new monthly classes. Did I not mention that? Because in the next 3 months, we can't help but do more classes, and we will. There's a live trading room, 6 hours per day, 59 indicators, email, trade ideas, okay? Instructors directly answer your trading questions via email and daily coaching sessions. Now, come with me to this page for a moment. Go to theotrade.com / okay, EDGE. That's edge. It's Echo, Dog, Golf, Echo. Right? Go to that page because in a moment, everybody's going to go to that page because I'm going to show you something important on there. To top, I think, this off this evening. So it's $297 for 3 months. That's it. And people are already asking questions in here. I'm going to get every single one of them. Okay? First of all, $297 for 3 months. What happens after 3 months? Anything you want to happen. It's not a membership anymore. Okay? We've been doing that. You know what? Pay the $297. Okay, we think you'll love us. You can come back again if you want, okay, but you don't have to. And we're going to, one other aspect in here. We're going to turn this into a completely riskless trade. How do we make it a riskless trade? Okay, everything that you need to start trading from novice to expert, absolute novice to expert. Okay, in a moment, I'm going to bring up a page. Okay, in fact, I'm going to bring it over right now. Just to kind of show you guys, right? I'm going to bring up a page. When we say novice to expert, okay, we're going to come in here and we're going to show you like a start here menu. You're like, what do you mean start here menu? Well, I don't know. Maybe you don't have a lot of experience in markets. That's okay. Okay. If you don't have a lot of experience, how are you going to get experience? Well, we have to get everybody ramped up, everybody on the exact same page. So I'm going to show you that here momentarily. But on top of this, we're going to make it a riskless trade. And how we actually make this a riskless trade, that's pretty easy. Everything you just start from novice to expert, we're going to put a money-back guarantee on it. Trade with us over the next 3 months. If you're not completely satisfied, just email us, support@theotrade.com. Provide us details of your trades and receive a full refund if you're not completely satisfied. By the way, we're also going to throw some stipulations on there if you guys don't mind, because people are like, I was not completely, okay? Listen, if you're not completely satisfied, you still need to do 10 trades using the earnings edge butterfly criteria in the next 3 months. You got to do 10 trades in 3 months. That's nothing. Your initial account value has to be at least $2,000. Okay, that's a stipulation in here. You must follow our criteria. So what am I saying over here? You can't make up your own crap. Follow our criteria, because I'm telling you, if you follow our criteria, you're going to be a pretty happy client. And, oh, this is my favorite. You have to provide real trades. No paper trading. Paper trading, this ain't paper trading, people. Listen, these trades are going to cost you 11 cents, 30 cents, 50 cents. Don't worry about it. That's the money-back guarantee stipulation. It is a riskless trade. Now, okay, one other kicker in here. Whoops. One other kicker. Get the TheoTrade. Just do it now. We're going to work with you guys directly. There's no spots left on the riskless deal. What happened, we actually did a presentation last week. Okay? We offered 50 spots on the riskless deal because, listen, this riskless deal, we take a lot of risk in effectively doing it. Okay? The riskless trade deal, it sold out within a few minutes. Literally, we signed up 50 people within a few minutes. I'm just adding 10 spots in the deal for tonight. Listen, we did a presentation last week, literally 1 week ago. Okay? We've already packed the October 19th course. Okay? The first 10 people to sign up, we will give you the riskless deal tonight. And we'll do it because, listen, you got to understand, with this riskless deal, people are going to send me their trades. They're going to send me their trades. They're going to have me, like, reconcile all the trades. It takes huge time. It takes huge time for any of us. Okay? There's, almost 10 full-time instructors now at TheoTrade, and there could be hundreds of people enrolling for this. We're going to add 10 spots for the deal tonight. We also have matters of trade size. 500 people take the course, and then all of a sudden, 500 people are actually doing the trades with you. Except we don't have 500 people taking the course. We have 4,000 people taking the course. Okay? 9 a.m. Central Time, the 297 deal is gone. I'm going to reiterate it again. There are 10 spots available. Okay? I will, one by one, people want to sign up for it, and I'll give you the web address. I'm going to answer a couple of questions. Don't panic. Okay? But there's 10 spots if you want into the riskless trade deal. Listen, there's no risk, and it's only $297. You're not going to go wrong in what we're teaching here tonight. Listen, what our members are saying. By the way, you guys are rocking it. Very impressed. Really refreshing to have you guys putting this together and sharing knowledge and not upselling everything and turning and burning your customer base. You've got a customer for life in me because of this approach, and I'm sure I'm not the only one. That's probably one of my favorite things because that's not what we're about. It's not what we're about, okay? Next one over here, Don's the most knowledgeable person I've ever heard in my 50 years of stock investing, and I've listened to many. His knowledge of the markets is like sitting next to a finance PhD. Highly recommend learning what this man has to say. I'll leave it at that for right now. Listen, we're going to go to this page. Everybody needs to go to the page because I'm going to show you in a moment. It's theotrade.com/edge. This is where you're going to download your free indicator in a second. Okay. But before I get there, again, and I'm going to hit a couple of the questions that come up here momentarily, but I just want to take you over here. Listen, the bonuses, okay? First of all, the class is October 19th. If you can't make it live, it's archived. That's one of the primary questions that come up, right? Okay. Next thing, $297 is tonight. Get in, okay? Get in at the riskless deal, right? Be one of the 10 people that get into the riskless deal. Why not? I want everybody to do it, but listen, it's a lot to reconcile in terms of the trades. Now, the bonuses, okay? Bonus number 1, 3 months, all access to TheoTrade, okay? Daily chat room, 24/7 archive, email trade ideas, trading indicators and scans, okay? And 10 hours of live support each week. That's the coaching sessions. The second thing, okay? With the 3 months, we give you 85 classes. For the next 3 months, you have access to everything that we've done and new monthly classes. So if another class comes up in the next 3 months, which it does because we do a new class every single month, when the next class comes up, you're in it and you're in it and you don't have to pay again. It's $297. You realize all these firms go out and they go, it's $497 and then it's another $1,000 for the indicator and it's another $2,000 to show up to be able to smell this indicator. It's ridiculous. It's $297. That's it. If you love us, come back after the next 3 months. How much is it? $297. Okay. We'll be okay. TheoTrade.com/edge. Now, everybody, follow me to the link right now because I'm going to take you over there. I'm going to answer a couple of questions. So follow me to this link for earnings expected move indicator. And I want to not only bring up the link, I want to reiterate the link so that everybody's aware. Okay. It's TheoTrade.com/echo. Okay. Dog, golf, echo. All right, let's actually bring up that page. This is TheoTrade. This is what TheoTrade looks like. All right, so welcome to TheoTrade. This is actually our site right here. This is where we stream live. Down below, it's our chat room. Okay, people are constantly talking in the chat room, and we do have over 4,000 people now involved in TheoTrade. The next thing I want to show you, here's well, let's go to the Start Here menu. This is the Start Here. Okay, you're brand new. You've never had any experience. Okay, what am I going to do? Okay, if you've never had any experience, well, options 101, options 201. We tell you from the absolute novice to most extreme trader. Okay, people think, I don't want to listen to basics. Good, you don't want to listen to basics? Then you can jump right into here. Here's the classes archive. Let me show you what our classes look like. We're broken down to option strategies, option newbies, technical analysis, day trading, stock classes, futures classes, hedging strategies, trend trading, pairs trading, mindset. Okay, if we sold these classes individually, there's one of the classes in here in mindset from Slim Miller. Okay, $1,000 just to go to that class, just to that class. Check out our option strategy classes. You want to go, you want to see what TheoTrade is about? Here, check this out. Sell premium, minimize risk, guide to high probability spreads. Okay. Guide to getting short and collecting income, the next big short, okay, weekly options trading advantage, Butterfly's guide to weekly returns. By the way, that is not the same as I'm doing. I'm doing something about earnings this next time. I love expected move. There's actually an entire class in here about expected move as well. Okay, duration iron condors, VIX volatility spreads, in-out spreads. Okay, Straddle's class. Maximum returns with infinity spreads. The infinity spread class, one of the biggest hit classes that we've ever done, okay, here at TheoTrade. You're getting access to everything, the live chat room. By the way, okay, there's also a newsletter that comes out at night, the different portfolios, all right, in-out spreads trader, infinity trader, sell premium portfolio, it's all there. Go directly to this site. And again, I promised I would show you guys where this indicator was. The indicator is found, whoa, I maximized over there. The indicator is found TheoTrade.com/, okay, it's echo, dog, golf, echo, okay? And we're there, by the way, to answer live support questions as well. Now, the indicator is found on the bottom of this page, okay? The indicator is found right at the bottom, earnings expected move indicator. For those of you, you're enrolling right now, you don't have to download the indicator from there. The indicator is also, of course, on the TheoTrade site. Now, all you have to do is click Add to Cart. You click Add to Cart, another page will populate, okay? This is it. First name, last name, email address, not a tremendous amount of information. It's $297. And I want to reiterate something because everybody's asking this. Is it a membership? It's not a membership, okay? We did away with that. We did away with it because people get, it's another membership over here. Listen, you need to get a hold of us after tonight, support@theotrade.com, okay? Or 800-256-8876. But we're here to answer questions. So you can come in here and actually chat one-to-one with us, right here, right now. Now, I am going to answer some questions here momentarily. By the way, for those of you, you're enrolling right now. There are 10 spots in the riskless trade. Chris B is in. Thank you. Steve from North Carolina. Okay. Frank from Michigan. All right. So those are the first 3. You're in riskless trade. Please feel free, email us, hop in the chat room if you have time tomorrow morning as well. All right. I'm going to answer a couple of questions here. In fact, I'll tell you what, I have some pre-formatted questions, okay? And then we'll come back to some general questions. So here's some of the pre-formatted questions. Again, I'll leave this link right up there. Okay. People always ask this, what do I need? What do I need to get started here? Well, you need a laptop. Is that fair? Okay. You need a laptop, internet connection. We have everything you need to get started. Absolute novice to most extreme. And I'm telling you, if you know this business, you're going to appreciate what we do on the extreme side. Okay. Number 2, this is not a membership. That's like the 10th time I've said that. We will not auto-renew or bill you again. Number 3, TheoTrade archives everything. When I say everything, every word, every sentence we archive. It's part of the technology that we built. We understand that not everyone can watch live trading throughout each trading session. And not only are things archived, but you can actually play us back at like twice the speed or 1.5 times the speed. You can do that. Number 4, okay, we will provide you access to TheoTrade Mobile where you can download the archives and view at your leisure. So you can actually download archives and watch them at 30,000 feet where you don't have to have an internet connection if you download them. We actually built an app. It's very similar to like how Netflix works. You can watch stuff offline. Also, you can email us anytime and receive a response 24 hours. Our instructors will get back to you in 24 hours, including trade-related questions. Listen, you can say like, hey, I was doing this trade, and we might turn around and go, don't do it. It's the worst thing I've ever seen. Okay. Number 6, you will gain access to every course TheoTrade has ever done in the previous 4 years, including classes and coaching and live trading, and all the archives are searchable. We have a full search, like searching through Google. Okay. Name a trading topic. And we've got an archive on it. Number 7, okay. The trades that we talk about here at TheoTrade can be done in an IRA or retirement account with as little as $2,000 in the account. Number 8, we at TheoTrade can help you get approved for options trading at several major brokers. People always say, I can't get approved for options trading. We got your back. We'll take care of it. Okay. Number 9, at 9 a.m. Central Time, October 19th, okay, the $297 deal is gone. Okay. Just get results, take action, enroll for it. We want you to enroll for it. Start watching the courses literally tonight. Now, I'm going to get some of your questions answered. Again, to enroll, simply come right to this page. And again, I'm going to throw the web address, theotrade.com/edge. It's Echo, Dog, Golf, Echo. Come in here, click add to cart. Okay. You can learn, again, about all the curriculum that we're going through, but also detailed in here all the bonuses. And that's 85 of the classes. Okay. There's day trading, there's swing trading, there's intraday, all the bonuses, which is you have access to everything that we do, 6 hours a day. Okay. Our different portfolios, 59 proprietary indicators. We put everything together in there for $297. Click add to cart. Now, I am going to go back now and answer some of your questions. All right. So let's get down to it. By the way, again, I'll reiterate this. This class is archived. Okay. The class is archived. It's $297 today. All right. By the way, thank you, Mark from Peoria, Arizona. You're not too far from me. You're not too far. I'm in Scottsdale. I'm not in Scottsdale right now. Okay. By the way, yes, TD Ameritrade would allow these strategies in a cash account as long as you're approved for options. Next question. Is expected move the same as market maker move? Chris, the answer is no. They are not the same thing. The market maker move, I do not like that equation on Thinkorswim. I fought not to put that on there. The expected move is much more substantiated than a market maker move. Okay. Number 2 came from Ricardo. He's asking, when do you close this transaction? That one is very important. Okay, when do you close it? More importantly, when do you actually open it? But the close is going to be based on a percentage return dependent upon what you pay for it. And we'll actually teach that in the course, Ricardo. All right, number 3, Bob was saying, isn't a butterfly a directional play? Like, isn't it a directional bias? Bob, it is, okay? It is. However, you have to understand that when you're doing a strategy that's, let's say, you're doing a strategy that has a relatively low probability. However, okay? By using expected move, we're going to increase the probability substantially, okay? Directional bias in this case does not matter. It's what I'm getting to, Bob. It's not going to matter if you're wrong directionally, because if you put the strategies on sequentially, they still make money. It's not ever about one trade. It's going to be about putting them on, again, sequentially. And I hope that makes a degree of sense, Bob. You'll actually see that really specified inside of the course. Number 4, do you put a butterfly on each side? John? No, you're not going to put a butterfly on each side. But that's as far as I'm going to go with that one. Okay. Number 5, should it expire on the day of reporting? Okay. Number 5, Stephen. No. You're not going to put a butterfly on the day it's expiring of reporting, because that would actually assume some assignment risk. And I'm actually going to avoid most of the assignment risk. See, we want to not put the feet in the fire, if you will. Okay. By the way, another individual from Illinois just enrolled, and I apologize. I'm not going to butcher your name. Okay. I believe it's Sergey. Okay. I hope I did not butcher your name. Please forgive me if I did. From Illinois, just enrolled over here. All right. By the way, again, to enroll, we have only, a handful of spots left in the riskless deal. It's TheoTrade.com/Echo Dog Golf Echo. I always say that because Edge, I don't know. You make sure that you get that right in there. All right. The next one that come up. So number 6, how does one determine the direction of earnings? Oh, that's a big portion of the class too. Man, you guys are asking all the right questions. So there's a probability associated with earnings announcements. And I'm actually going to show you what is the more likely scenario, the market trading higher or lower after the earnings announcements. And I could do all of that inside of 2 slides because that one's already ready to go. I think you guys will actually appreciate this because everybody's asking like the right questions. Do I get bullish? Do I get bearish? You're actually going to find out that doesn't really matter that much in this strategy. It's going to kind of blow your mind a little bit, right? I really think you guys are going to enjoy this. By the way, Bob H. from Vermont just enrolled. Thank you very much, Bob. And if you guys have more questions, I am here in the chat room for the next few minutes answering them. By the way, a few last items on here for some housekeeping. By the way, if you're interested in what some of the members are saying, TheoTrade archives, absolute godsend. Okay, you can stop the tapes, reverse the tape, make notes. Okay, and use the information from Bill. TheoTrade topics and content are right on target. Okay, really getting a lot out of the classes. My trading results are improving thanks to TheoTrade. Keep up the great work, Don. It's from Gary M. Other ones over here. Okay. By the way, I'm a new member of TheoTrade and I find it incredibly useful. Keep it up. Your presentations seem to add a few twists to what I've seen elsewhere, and this is very useful. Another thing I like about TheoTrade is you record all of what you present. Please keep recording all of the complete presentations, which we will always do, literally every second. Okay, here's one from Jennifer. Thanks heaps. Your explanation is very clear. I'm so impressed that I received a response, okay, and that it was so comprehensive. Usually that doesn't happen. I've asked lots of questions online and rarely get a response. Thanks and best wishes from Jennifer. And again, I take these things to heart. We answer emails, all right? I stress that to people all the time because wherever you go, you sign up, you take a course, you're like, I got questions, and you can't get answers. Well, that's what we do here at TheoTrade. Again, please, I want everybody to attend this Saturday's course. If you can't attend live, attend in the archive. You can also join us literally tomorrow morning. I will kick off the chat room at 6:22 Pacific time in the morning. You can't make it live? Again, you can actually make it in the archive. By the way, thank you, Scott R. from Wisconsin. Again, if you have more questions, I am going to hang out here in the chat room for a few more minutes. Okay. All right. With that, again, TheoTrade.com/edge. I'll see everybody live first thing in the morning or Saturday morning for the Guide to Maximum Edge Training's Earnings course. Thanks, everybody. Have a great night. Bye-bye.